All right. So what I was talking about here was, you know, when you have the reason why you have to have systematic and mathematical structure is because once you start trading, you have to have a kind of like a habit. It is what it is. It does what it does. And if it goes, it's like you're making five trades. You should successfully make 20% on three to four of those trades out of every five. And if you can't do that,
Mhm.
then you need to fix your trade. But the reason why you don't like change your where you start to sell when you hit a target, I like, so for instance, if my target is $400 and I get to 500, I set my stop loss at 425. And if it runs and I wake up and it's great, it's good. If it goes, or I'll put a target for 700 or something and say, oh, you know what, if I get to 800, I doubled my expectations, even better. If it comes back and hits my stop loss, I'm out at 425. Now, the way I kind of break it down is also on stop losses. For every thousand, I give myself $100 loss, because you got to remind, like, every time I make a trade, I'm looking for a 20% trade, so I'm looking for 200 every thousand. So to have a ratio of 2 to 1 on 200, I'm willing to give up $100 risk to get to 200, which then it could either move higher, 2 to 3 to 4. But that's kind of how you set up. Well, that's the thing we work on trade structure, is developing a very clear cut win, a target for a win and a target for a loss. Because mentally, you have to have those in there, because it's like trading is like a job. Like, you're only allowed to do X, Y, and Z. And once you start dipping into the breaking, extending something or buying it, it's like you start creating these other habits of buying in or pushing a limit, or you start to create different, habits that aren't systematic. And then what happens is you can get into a situation where, like, let's say if I'm doing a $3,000 trade, and this trade seems like I'm just sure that the supports are there. It's been a good week. Let's say I'm up, 4 or 5 thousand, and I see a trade and I say, you know what, this trade is really good. It's been a good week. It's developing. I'll do a $3,000 trade, which means I have a $300 stop loss. I'm going to move my stop loss to 600 or maybe 800, because I'm going to let this, kind of play out. And let's say I leave my trade there and I come back and I'm down 600, 700. Once you see that, you say, man, I'm down twice as much. The first instinct is to give it more of a, what they call giving more rope, giving a little more rope, because you need a little more leeway. Because if it went down this far, it's going to hit the support. I know where the support is. You're sure of the support, and you decide to go down below even further. And I say, fuck it, I'm going to 1200, because I'm normally losing 300, but I'm down 8 right now, and I don't want to lose 8, and my stop loss is at 9, so I'm gonna make it 1200. So you start adding to that stop loss, and next thing you know, you're at the lowest peak where you're at, $1,200, $1,300 in stop loss, and you're like hitting that support, and you're like, it's going to hold. And then all of a sudden, because I wasn't willing to lose an extra $600 on this trade, I'm now negative 1,500, because I'm trying to save the fucking trade. And that
Right.
is why, when you create habits of doing that and just not accepting the entry and not accepting that the trade didn't go the way it was laid out, and then going for another new setup, you cost yourself a lot more by opening a door saying, okay, instead of being my normal 300 on a 3,000, I'm going to make it 6. And then when I go to 4 or 5, I add more, because I'm like, fuck it, I'm already down an extra 3. It's got to bounce. Next thing you know, you can be down 1,500. So, Joey, like,
Mhm. That's what I did. I was waiting for it. I was doing shorts, and every time I was like, no fucking way, how's it getting up there? And I bought back in again, and then it went up. I was like, all right, we're topping out. And like I said, I bought in the third time. I set my stop loss to where I went way back to get a number. And then I was like, okay, let me bump up a little bit above that, and I'll be fine. I'll be safe. And I came back in and saw totally liquidated. I was like, what?
So what the okay? So walk me through
Mhm.
because what? So at one point was the trade up any money?
Yeah, I got okay. So I got in. Let me pull it up on BitMEX. Order history. So, um,
Because a lot of times is a lot of a lot, and it's kind of crazy because the reason why setting targets for profits and just taking the profits become very it becomes like your habit that you have to have is because I will say that at least 90 easily 80% of the time that I see a trade that is a horrendous loss,
mhm.
the trade was up a good amount of money before it went negative. Like that was the one thing that I always kind of like every time I heard a really shitty
Mhm.
story and I go look at the
Yeah.
trade. And to me, I'm
Yeah.
like looking at the trade going, well, that trade should have won, right? Like, and then I go and
Well,
then,
that was the thing. When I had two great trades yesterday because I went off the Discord. I was like, okay, cool. I'm gonna go trade a Dove. Another mistake that I shouldn't have gone as heavy as I did, and I used my same rules for as I do for XRP. And no, Doge doesn't do that. So, but I made two wins. So I was like, okay, I was cocky. And the second win was by accident. I think the second win closed out for 2665, so 2600. And I was like, okay. I was like, the market's given so much, it's gotta pull back. So I uh, got in my short at on 8-1 at 2217. So that's what, 1017 at night, right?
yeah, what was the price of Doge?
Um, so I got in, opened a short at 40x, average price of 7006.
7006.
Yeah, 0.07006.
Well, that was what in the morning.
Well, no, that was 22, that would be 1017 at night. And then I bought in again um, at 1 in the morning. I bought in at 07023. Um, and then I bought in again at 1:30 um, this afternoon at 07054. And then got liquidated 235 when it wicked up. It wiped me out. It was like you see the whip, right? It's freaking huge out of nowhere.
So okay, now okay. This is what I mean here. So like you see my screen.
Mm-hmm.
So here's a scenario, and hey, you still in here?
Yes.
Yeah.
Excuse me, I'm still here.
Oh,
Yes.
okay. There, Ashanti. There we go. I was gonna say, put your name on your thing. All right. So here's what happens, right? He gets into a
Mm-hmm.
trade here, and then
Mhm.
he has a moment that there's a pullback here, right? And he's up at that moment, and then it goes the other direction on him, and he's buying in, but then when he buys here, he has a huge drop, right? So it's retested this support line twice, right? And he hit it again. Now, at this point, he's probably, if he's
What's the time? What time is that?
So that would be, so my time would say 3 a.m. Eastern this morning.
Yeah, I was sleeping.
Yeah. So, and it stayed there because it hit the same, it was hitting this area until it hit it again at 4 a.m. and then at 6 a.m. And then it started to build momentum after 6 a.m. That's where it kind of like, that was the last time that it hit that support. Now, what I want to do here is, before we go over like the entire thing, is this, right? Is that this is a normal story. He gets in here, and this might have been a wrong time to get in. I'm going to go back and look at the trade itself, and it has a little bit of a dip here, and he's like, okay, it's starting to kind of work its way, but then it explodes on it, right? Then he ends up buying back in up here because he's like, oh, it's got to come down from here. Now he ends up getting to a position where it does fall down for him. Then it bounces off of a support, and then it retests that support, right? Now at this point he's sleeping, but looking at where it took off, and this is kind of where we were talking about building the other day, like how you find a support or resistance. Right here on that first move, there is a time that it comes down, and it has a wick in here that it breaks down to, which ends up being the support zone here, right? Now it hits that, and then all of a sudden there's an explosion there, right? Now when that explosion happens, right, he has a target here where he could have looked at and said, okay, 6987 showed me some support there, right? So more than likely, because of this explosion that happened, was that there's a shitload of people putting limit orders there, right? So what's going to happen is, after this next explosion that happens, everybody who saw that move is going to go back to that support and go, oh, I'm putting my limit order there, because it's going to come back and retest, right? Now I'm just going over this just because, like, just on a trading, the mindset of traders, like, you always got to remember where they're kind of like, how they determine a trade, right? So that means this 6987 that caused that first big move against you would have been where you could have set your next target to take profit, because more than likely that's going to hit. And then after it hits and it bounces, wherever that goes is where you, if you're still, believing in the short, is where you would retake your short position and try to break through this support zone, right? Because you had two testing here, right? This is just kind of like the basics, right? So you had the original.
There was twice I could have got out and been ahead, and I was like, not right now. I was like, I'm waiting for the real push. And then sometime later this morning, it just so happened when I looked at it, I went back in the phone and was like, oh shit, I'm up. And I could have closed for a small profit, a couple $100. And I was like, nah, we're good. And then I was like, oh shit.
So let me ask you right there. So, okay, so here we have the original support showing limit orders. It hits here again, which would have been where most people put their limit orders in. And then it falls again. Now, during this time, you're sleeping. And then as you wake up, you see that it's holding the support, right? 1, 2, 3 times. At that time, we can look at this trade. It could have went the other way. But my question is this, right? So before we get into like the whole thing, is when you set up a trade, right? The trade structure is designed to set a very specific amount for losses. So like right now, what has been your average win on the trades that you've been winning? Are you 2003? Because I've seen 400, 750, 1300.
Well, that's the thing. As I was having good wins, I got cockier. So I had, what day we got? I got on the 29th, I had an 857, then a 758, then I did 1371, then I did 1048, then I did the 2665. That's where I got super cocky, and yeah, then I got ripped.
What was that? How much before you got cocky? How much was it?
Yeah, the last one I got cocky on was the 26 2665.
Oh, 2600?
Yeah.
Yeah.
Mm-hmm.
So this is where, okay, this is kind of where, because her question earlier here, Shanti was basically saying, do you ever sell 50% and let it run? Do you ever sell 90% and let it run? And really, the reason why I don't is two things, right? Because trading 102 is systematic and mathematical, right? When you start doing the leave 10% and let it run, that's an emotional decision. When you're selling half and looking for an extra push, mathematically, if I had $1,000 and it moved 1% and I did a 20x, that's $200. If I sell half of my position and it moves 1%, and that means that theoretically, instead of making $200, I only made 100. So I'm cutting the profit in half by selling half. So if I believe that it's going to move the 1%, I want my full 200, right? Because the way I look at it is, if I what the risk and reward is the side. That's why when you have a target of, let's say my target is $400, and I see the price hit, it's moving above 400, and I'm like, I move my target to 600, and then what happens is, let's say I'm at $500, I put my stop loss at 425 or 450, and I say to myself, okay, I'm going to set a target of 800. And if it gets there, I doubled. If it doesn't, I'm stopped out. I made my 4. And if I check on it or come back later and I'm sitting at 650, 700, and I'm like, I'll close it out because I did what I had to do. But even if it, whatever direction, if I wake up in the morning, it's the other direction, I made my 400. If it goes the other direction, I made the 8. But it's systematically, there's no emotions or gut feeling there. It's just it's a systematic trade, right? So with you, and I would love for you to post, like, okay, how you went and just looked at all your last trades and you see your wins and your.
Oh, did I just posted all my losses?
Yeah. But on your, like, you go to your position history, and you can see, like,
in Bit.
Yeah, Bitness.
I was just talking about.
Yeah. So that way you can go over your last trades and say, oh, here's 700, here's 1300, here's 450. I won 2600, and then show a fucking the loss, right?
Yeah. It's you talking about that one where it shows your monthly or whatever? It puts out like
No, you can go like, so if you slide in here, right? So if I go to a position history right here, when you go to position history, you can kind of like see all your little moves here. So this is like, as I'm going through here, and I'm like, right here, I put a trade in because I wanted to, when we were starting this.
Oh, are you under Doge right now? In futures? Is that what you?
Yeah.
Okay.
Yeah, position history. So a lot of times when I'm doing trades in here, I'm just, if we're doing a class or something, we're posting a quick trade, how to close it. Like this trade right now that it's in is, I wanted to actually, the lesson that we're going to do after we close out of this one is how to close this trade correctly. So this trade is only open just to basically track the call out that was the other day. We're up 83% on that call out, and then it's only still open because it's the trade I'm going to show you how to close properly on. Right. So,
Gotcha.
But this is what you.
Yeah, because that was the other thing, man. I was pissed. I got shitty with the exchange or whatever, because when I closed out my trade, it was showing I was up, and then when I went to go check, I lost money on the trade because the way that I guess I cashed it out or whatever. Granted, it wasn't a lot, but still, when I was walking away thinking I was making money and I ended up negative, I was like, what the hell?
Yeah, so I'm going to show you, like, that's why this is open, because this is the trade I'm going to show you to close.
Mhm.
But go to your position history, and then you should be able to kind of like see these details here, and just take a screenshot of the entire thing like this. So then you can, what it does for us, it allows us to go back and you can see your losses, your et cetera, right?
Mhm.
So basically what we're looking at here is so let me get back to the chart there. Okay. So what I was asking was this, right? Because the ideal is always to accept the the parameters of your trade structure, right? So you're
Mhm.
kind of in a position where you're doing, what's the average size of the trade bag?
What do you mean? That I'm starting off with?
Yeah, yeah.
Like 15 or 20?
Okay, so 1,500, 2,000.
No, 15,000 or 20 grand.
Okay, so when no, I'm talking about when you enter a trade. Are you trading at 15,000? Is that the bag?
Yeah.
Okay. So when you're doing
Well, no, like my total bag. Is that what you're talking about?
no,
Like
no,
what
no,
do I
no, no,
have in
no.
balance that I'm trading on?
When you enter a trade, right? So when you do a
Mhm.
trade, what's the total amount that you put into the trade?
Like 10 grand.
Okay. So that's why I was saying,
I was
like,
doing between, yeah, I was doing between 10, I think 14 was the most.
yeah. So that's why I was saying, like, my trade structure is for every 1,000 that I do, I give myself. Okay, so here's how you do the trade structure, right? So
Mhm.
that just means this. So when you're doing a $1,000 trade, right? Just to keep the math simple, your goal is to make the 10%, right? Is that kind of like your target is 10 to 15%, kind of like the low
Mhm.
end?
Mhm.
So that means that you're making $100 a trade. So if you want to make 600, obviously this is why you're doing $6,000 to $10,000 a bag. You're trying to make $700 to $1,000, which is a simple
Mhm.
10% move, right?
Right.
Now what that means is, let's keep it on the lower side and say, okay, I'm going to go for a 10% move on a $7,000 bag, or in between that 700. So I'm going to kind of say that my goal here is an average of $500 a trade, right? Take the 500 and
Mhm.
say my goal is to be successful where 3 out of 5 trades, because I'm also taking less risk because I'm going for less percentages. I'm going to basically say that I should easily win 3 out of 5 trades. That means that you're going to have a $500 trade out of 5. You're going to win that 3 times. So out of 10, you're going to win 6, right? That means that
Mhm.
10 trades that you make, 6 will be successful, 4 will not. But what that means is on the 6 winning trades, by doing that size of a bag, you should take home a total of $3,000, because you're doing $500 profit times 6 trades, $3,000, right? What that means
Mhm.
is 6 out of 10 trades you won, you took home 3,000. You cut that in half, which means that you're allowed to lose $1,500 on those 4 losing trades. Now, you're not always going to get in those 4 losing trades, because sometimes your target won't hit or your entry won't hit, or by being greedy entries, you avoid these losses completely, right? Because sometimes not being in a trade is the same as avoiding a losing trade. So in reality, you might set up 10 trades, hit 6 winning trades, and 2 trades you don't even get into because the entry didn't work out. But at the end of the
Right.
day, what this is doing is saying, if I have $1,500, divide that by 4 trades, that means the maximum that I'm willing to lose is 375. So you can roll that up a little bit and say, okay, because some of your trades that you're going for 500 are going to end up being 1,000, 1,500. So what you can do is on your stop loss here is you can roll that up and say, okay, that means 375 per loss. I'm going to move that up to $400. Okay. and that's your stop loss. So when you go to make a trade, whatever it is, whether it's a $10,000 trade, you have a number where it's okay. I'm putting in 10,000. The most that you would want to lose on that, right, is 10%. So you know that your stop loss should be 400. If you're doing a $10,000 trade, you can say to yourself, all right, I'm willing to, because mathematically on a 10, let's say you're winning 10,000, you're winning your 10%, you're doing $1,000 on your wins. That just simply means that out of 10 trades, you're going to win 6 of them. That's $6,000. Divide that by 2, that's 3,000, right? And that's where right there, if I divided that 3,000 by 4 losses, I can lose up to $750 a trade. So your stop loss should be $700 to $800 max that you are willing to lose on a bad trade. Now,
I was pulling that 30 to 45%.
Yeah. No, it's crazy. Because what's happening is you're not
with 40x leverage.
Yeah. That's, and I see what you. Yeah. The whole point, and this is, see, we've had this talk. The reason I know. The reason why you're trading a $10,000 bag is so you can go from 40x leverage to 20. Because the reason why you use the leverage at a 40% is because you need to make a certain amount of gains, right? And then what you're doing is you're mastering. So your goal is to master a 40 to 50% trade with $1,000 to $5,000. Once you've mastered the 40 to 50% trade, what I mean by that is and it's like how you've been doing on XRP, when a trade sets up, when a time frame is doing something, when the moon indicator says you're right on what you're seeing, and you decide that this trade is going to start reversing, it's going to start going up or it's going to start going down, and then you go to your entry and you look for your support or your resistance entries, your secondary resistance, your secondary supports. You set up your entry number, you put it together, and there's your trade. Once you do all that, you then calculate in your metrics, right? And your metrics are, and the ideal is to be like, I'm now that I've figured out my steps to where a trade is going up or down. Once I figured out my entry, I now see that I'm producing a 40 to 50% win trade that wins 40 to 50% with a 30x, a 40x, like say 40x leverage. And you're doing it consistently where it's 6 out of 10, 6 out of 10. What you do there is say, okay, now that I've mastered the 40 to 50% win trade, now what I'm going to do is I'm going to increase my money. So if I'm doing $1,000 bag, a $2,000 bag, now I'm going to do 6,000 or 10,000. But instead of hoping to get 40 to 50% on my trade, I'm going to take 20%, which is half of my normal average, which means that if I'm winning 6 out of 10, now that I'm going for 20%, I'm probably going to end up getting a 7 to 8 win rate because my target is small.
Because you've decreased, or
I'm lowering risk. Because
that's what I was just saying.
Yeah, because that the whole agenda is this. Let's say you're doing a $2,000. Let's just say you're doing $1,000 bag, and you're making 40% on that because that's what you're going for, right? So you're making $400 a trade, and you master this to where it's $400, and then you're like, you know what? I got this trade down. I need to make more than 400, right? So what most people do is they try to push that to where they get up to 60% or 70 because they want to make $600. The correct thing to do is say, okay, I've got $1,000. I average $400 per trade, 40%. I'm going to make it a $5,000 trade. So now my $400, if I take the same 40%, is now worth $2,000. You're keeping the risk high, right? Because the risk actually goes higher, because now if you did lose your 10% stop loss, instead of 100, it's 500, right? So what you're supposed to do here is, when you move to $5,000, instead of going for 40%, you now go for 20%, right?
Now increase double.
Yeah, because now instead of $400, you're making $1,000, but you're going for half of your what you've already created. Your skill level is set to make 40% per trade. So now that you have your skill level up at that position, right? Now what you're doing is you're saying, hey, my skill level lets me know that I can pretty much knock out 40% on every trade that I'm finding, and I got that pretty much locked in. So now what I'm going to do is I'm going to put in a shitload of money, and I'm going to go for half of my average. So now if I can get 40% 6 out of 10 times, I'm going to get 20% guaranteed 6 out of 10 times. Like, that's a guarantee. Right. Now, that's also going to probably put you in a position where you're probably going to get 7 out of 10 trades. Because what happens is, the basic is, if you stay exactly the same and you still win 6 out of 10 and you're taking 20%, right? That's $200 times 5, because you went from 1,000 to 5,000. Now instead of making $400 a trade, you're making 1,000 a trade. You have raised your profits by 150%. You're doing still 6 out of 10 trades, and you're taking 20%, half of your average that you used to go for. Now your skill level to make this even better would come down to you simply getting to that 20%, moving your stop loss, letting it run to 30, put your stop loss set in that 20% area, and then target your normal 40%. And if you do happen to where you continue to hit your 40s, well, guess what? You can turn that 1,000 into 1,500 or even $2,000, because you're still hitting your targets. Or if you're moving your stop losses and you end up targeting, let's say 30%, you went from making 400 to 1,500. You see what I'm saying?
Yeah.
And you're still doing the same thing, except you're taking away the risk by lowering the target. Now, once you get that under the control, let's say you say, well, shit, I'm making $1,500 or I'm making 1,000. I want to make more. Then you do a $10,000 bag. Now you're making $2,000 or $3,000 every 10 trades.
Yeah, see, that's where I fucked up, was the leverage. I should have dropped the leverage big time, and because when I was doing the leverage or whatever, the amount of loss that it was taking, but like where it wicked out, I was like, there's no way it's hitting it. You know what I mean? That was like impossible to me, and it did, and I should have learned the lesson, because this is the second time it's done that I've gotten stomped out.
Well, that's the point of when you lower the leverage, that gives you more cushion for your stop loss, right?
Yeah.
And this is where
I didn't get that till just now. They just finally clicked.
Yeah, and that's the point is, and if you go, we just made a couple videos on the trade structures. Like, I literally just went over this. When you have the trade structure and you have your rules, when you have your boundaries set, it allows you to look at a trade, put a trade together, and then put your boundaries in and go, I need to go lower. My entry needs to be lower, because I'm only, for every 10,000, I'm only allowed to lose $800, maximum 1,000. So if I set my entry here, this stop loss or this lower levels are below my $1,000, I need to keep moving my entry down until where my $1,000 stop loss is a little bit, or a nice little cushion below the lowest support. So if it does do that super wick, I'm still good. Because even if I miss this trade because of that, I'm all right with that, because 7 out of 10 times it will get that lower wick where you would
Uh-huh.
lose 7 of the trades versus winning, right? So that's kind of where,
Mhm.
you know, and I'll put the video in there where it's at the end of it. If you go in, I think it's like it's a little bit an hour and a half, a couple long video, but if you go to the end of it, it's the bullet points of that. But
Mhm.
the reason why you have
And
that,
what made it wick up? Like that's insane. Like I'm looking at it right now. It was set 7080 and it
well,
jumped
yeah,
all the way
yeah,
up
we'll
to
look at that, but
7124 out of nowhere.
before we jump there, I want to kind of go over here because this is
Yeah.
what I originally
Okay.
where we originally started was the basics of trading 101, right? Always, you know,
Mhm.
determination. But here you have your entry, you have your second entry, and you know, and then you have a move that while you were sleeping, it goes down, it taps a target. This is how you could set up a target where you want to hit because it showed that support.
Mhm.
But when you got up, eventually you were at a point that you looked at it, you were up a couple $100, right?
Yep.
Now, you should have been where being up a couple hundred, you have your stop loss. If you're doing it, how much was the trade? 14,000, 10,000?
Yep. 14.
Yeah. So that means that your stop loss should have been for every 100. So the maximum you should have been losing on this trade should have been 1,400, right? But
Yeah, I think I was like 55 or 65.
yeah, no. So that's where the amount of money that you could lose on that trade. So for 10,000, it's 750. So it'd be 300. So it'd be $1,000, right? So when you
Mhm.
were up $300, your stop loss should have been moved or centered in on losing 1,000. And when you got up 300 and you see how it's going sideways, that's where you should say,
Mhm.
oh, okay, I'm up 300 here. Let me move my stop loss to negative 500 because it hasn't done what I really thought it was going to do. And listen to what I'm saying here. If you are mentally thinking that it should have dumped down here and then it didn't dump,
Mhm.
and then you said, oh, this should have dumped down here and it didn't dump, and then you get to here and you say, this should have dumped down here and it didn't dump, and now you're like leveled here and you're going, you know what, this should dump down here. Most
That's
people,
how I thought. Like I'm
yes,
going to go to bed. I was like, it'll
it'll do
dump
what it's
down.
supposed to do. Here's
Maybe
what I
flip
want you to
out.
remember is when
Mhm.
you wake up and you're up 300-400 bucks after all those opportunities to dump, when something
Mhm.
doesn't do what it's supposed to do, then we'll know what it's going to do, which is the opposite, right? But my whole
Right.
point is here is that after all those opportunities of those big dumps that didn't happen, listen to what I'm saying here because this is very important.
Mhm.
When it's almost like the theory of it's like something hitting a resistance 4 or 5 times, eventually it breaks through. If something hits
Mhm.
support 4 or 5 times, it normally breaks through, right? So what I
Right.
want you to say here is this. When you see this hit the support here and it bounces and it hits the support here, normally the third time, which was here, this should have
Mhm.
broke through, right?
Right.
What I want you to think of is this. When you have your $1,400 stop loss, which would have been somewhere up here, and you see that it tried to break through and it bounced, it tried to break through and it bounced, and you're like, you know what? It's going to break through on this next one. Here's the thing. Since the probability is that it should break through on the third, you need to move your stop loss down to the areas of here where it hasn't bounced above because it's showing it's showing that it's not going to bounce that. So you would move down
Mm.
here, and then that way, because here's the thought process. Your thought process is the third time when it hits the support, it will give way. What you
Mhm.
have to do there is move your stop loss to your theory, because theoretically, if you're right, which you thought you were, then why do you need your stop loss way over here?
That's true.
You need to move it down because at this point you have already survived the first bounce, you survived the second bounce, and now you can say, well, this is showing it's not going to bounce that high. Let me go ahead and start to close this gap and put yourself here. What that's going to do is
Mhm.
protect you from the big bounces that happen out of nowhere et cetera, until your skill level gets better to see why this didn't break through, which we'll cover in a different video. But what I'm
Yeah.
saying is moving your stop loss down to those bounces to say, okay, yeah, well, you didn't bounce that high. That's a way to protect those crazy stop losses that might be too high because your conviction, if you're not in your systematic zone. And the other one
Exactly.
is, that way if this bounced when it did bounce, you would have taken a loss here for maybe 700, right? But you would have been like, damn, why didn't it break through that third time? But now what that does is that tells you that, hey, you had the 3 chances where it should happen. It didn't do what it should. So what did it do? The opposite, right? When it doesn't do what it's supposed to do, it does what we know what it's going to do. But what that is a way for you to kind of say, oh, it didn't break through, but it's not bouncing high. Let me move my stop loss closer, because if it doesn't break through this third time, then I'm wrong.
Yeah.
And then but by having the stop loss where it should have started off at $1,000 for the maximum, no matter what you do, like if you're doing 10 grand, maximum is $1,000 stop loss. You're doing 14,000, $1,000 stop loss. I'm doing 20,000, $1,000 stop loss. You see what I'm saying? Because the reality is that as the money gets bigger, the leverage gets lower, which means that a 1% move on a 40x is a 40% loss. But on a 10x, it's a 10% loss. You see what I'm saying? So when you start increasing the bag, you're giving yourself a bigger cushion of that 1%, right? But it should always be in that area. Like when you get to $10,000, the $1,000 is your stop loss. When you get to 20,000, you can then move to $1,500. You know what I mean? But in between that window, you got to have that number. And what that means is this: if you come around and you decide that you're making a position, right? And now I'll use the short position here. And I get into a trade, and I'm in this trade. So your original order was here, okay? Just to kind of give you an ideal. And now, if I'm in a 10, and I say to myself, okay, here's my 1% move, right? I'm always doing 1% up, 1% down, right? And that kind of lets me know, it kind of gives me an area of understanding that I need a 1% move for my 40x to be 40%. And if I have a stop loss at 40%, it's 1% back, right? So these two moves here kind of give you your target and your stop loss, right? And this is basically saying, okay, now the reality is if I do a 40x here and I'm going down to here, right? It looks probable because the reality is if I'm expecting this to go down, I'm probably expecting it to go somewhere in here, right? Or bounce somewhere over here. So I find an area that I look for where I kind of piece together where I think my target is, right? Some type of target. Could have been here, could have been here, could have been here. Whatever it is, you got to find some type of target that you're going to say, and you're going to say, okay, that's what I'm looking for. I'm probably going to be a 1% here, right? Normally, I'm always doing a 1% trade, so that's kind of like my target. Then on the other side, I'm going to move this according to what I'm doing. So if I'm doing a 10x on a 10,000, that means I'm allowed a 1% pullback, which would be here. If I'm doing a 20x, that means I'm allowed a 0.5 pullback, which would be here.
I see.
So
Okay.
now I have my 2 levels of pullbacks, right? So when I decide to come in here, I can look at that, and let's remember that the rest of this doesn't exist, right? Let me put a box here.
So if I pulled that, if I did 40, that means I'm cutting that last red line in half from there, right?
Yeah. So the rest of this chart over here doesn't exist in the black, okay? Because we're right in this section here. So what happens is when you start to piece this together, you have your first, if you did a 20x, this would be you losing 20, a 1% move. This right here would be you losing 10% on your 20x. This would be, you know, if you do a 1%, you're losing 20. You're doing a 40x, which means this first
Yeah.
line here, like you kind of go in here, this is a 20% loss because that's a 0.5%. And then this up here, this is a 40% loss on my, if I'm doing my full 1%. So when you have those levels, they're already built in there. What this allows you to do is kind of put yourself in a position where you're anticipating like the move, right? So when I look
Right.
at this and I say, well, shit, this right here is going to give me a 20% loss, and this right here is a 40% because I'm doing a 40x leverage. This is a 1% move here. So if I looked at this, right, this is kind of where, you know, and when people hear what you're saying in the beginning, it's kind of crazy. It's like, okay, I'm doing $14,000 with a 40x leverage, right?
Mm-hmm.
And what that means is if you went down 1%, which is this direction, that means that getting to here, you would lose 40% of your $14,000. And then you have your half, which is right in here, which is where you lose 20%, right? So now you have this ideal of like the maximum if I'm doing my stop loss is 40. Now the problem is this is just you thinking through your walkthrough, and your target is 1%, which is here. And this is your, in your mind, this is a 40% gain. It's 40% gain, which is equivalent to $6,000. Okay. Now, when you have that there and we're looking at this, and then you go here and you're like, okay, here's my 20% loss, which is basically equivalent to, it would be 2,000, 3,000. So this is a $3,000 loss, right? 20%, right? 2,000, 3,000. And then if you lost 40%, that would be equivalent to $6,000 on the $14,000 trade, right?
Yeah.
So now, when you break it down like this, a trade structure, you can see that your max is 6. You don't want to give up. You always want a 2-to-1. So the reality is you only want to be able to lose 3,000. So no matter what, you need to be at that. This is your stop loss scenario right there. Now the weird thing about this trade is that as you piece it together, is kind of like this, which is kind of where you ended up. Is you have a, considering where you are at the time of the trade, right? It doesn't look like um, let's adjust this a little bit. So you got it at 7.7. So that would put you here, and that would put that there. Okay. So when you're getting into this trade in the beginning, it's kind of in a scenario where it looks like, oh, okay, yeah, it's had a big push. It had a second big push. Even if it comes back up to the double top, I'm still in a good spot. My stop loss is way up here on a 40% loss. So yeah, I could survive this. So even on this, we can see on this push that went past it, you still ended up coming back down. And this is where you ended up in profit here, but you didn't take it because it was only, you know, at that point you had been cost average buying. You're only up, you know, hundreds of dollars, right? But it ended up, you know, making that move. But what I want to focus on here is the trade structure, right? Which is this. If you're winning 6,000, which is the target, the most you can give up is 3,000. So this 40% here is not an option because it's above half of what your gain is. So you would be stuck with this scenario here where you'd have to go there. And then what you do is you have to say to yourself, okay, I need to make this more. I liked having my stop loss up in this area here. So what happens is you can, if you're keeping the leverage at 40, you would be moving your entry higher up is saying, okay, you know what, I want to be pretty close. So this is the stop loss entry. See what I'm saying?
Okay.
So what would happen is you would have to move your entry to this point here in order to create the ability to have a target of 6,000, right? Which now becomes easier to get to. But the whole point of it is we're not working for the win, right? Because trading 101 is how do I get to my win? What we're doing here is reverse engineering, and we're deciding on our loss. So I'm only willing to lose 3,000 here. So I have to at least have an entry up here if I'm going to run a 40x. See what I'm saying?
Yeah.
So right there, I start to develop. Now I'm looking at my trade a little bit differently, because remember, we haven't seen the rest of the trade play out. We're in this early beginning. We're still in this little section where you've come to a decision that you're going to enter a short here. All right, so that's kind of where the blue arrows, where we're starting to think of the trade. Once we start breaking down the trade structure, we know that if we do enter there, then that means that my $3,000 loss, or my 40x leverage, would put me at a $6,000 loss up here. I'm only allowed to lose 3,000, which means I can only lose 20% here. So I have to move to my $3,000 loss area here to create a better stop loss scenario for myself. This is why we talk about having the stop loss entry, right?
Mm-hmm.
Because now if you do hit this stop loss up here, it's not going to be 6,000 because you've moved closer. It's going to be 3,000. So now you've created to where your $3,000 loss is here. Now when you look at the trade, it looks even better because you're not currently in the trade that you got into on this blue box. You're in a different scenario here, because now you're in a scenario where what you're doing is you're looking at, let me trade that to white, I need to trade that to blue. Instead of this entry, you now set your entry back here to the 0742, because you need to make sure that if you do lose 3,000, what you wanted to do is increase the cushion from here to here to here.
Yeah, but I didn't think it was going to go anywhere near the
Yeah, but this is what I'm saying is like, and this is what Ashanti asked me the other day. She goes, "Do you always do the stop loss entry?" And I say yes, because when you first start to figure out your trade skills, or to figure out your average of winning, right? You always have to use a step to rinse and repeat. And even if, let's say, you do the stop loss entry, and let's say you were right, and it doesn't go up that high, it goes to here, and then it crashes, right?
Mm-hmm.
What's going to happen is, once it crashes, what's it going to do? It's going to come down, it's going to bounce, and then it's going to come down, right? There's always three moves. There's the initial move of the trend. There's the limit orders that bounce wave 2, and then wave 3 is the finish, right? So and this is skill level, right? What you missed here was this. The first thing is you can't take a short until it shows you that it's actually going to short, right?
Mm-hmm.
And that is by basically having a very determined move down, then a bounce, right? So notice over here on this candle here, it had a bigger pullback there, and then it bounced. You see what I'm saying?
Mm-hmm.
Then it goes sideways, and it shows that it has no more volume, and then that's the short you wanted to take right there. You see what I'm
So
saying?
if one of what you just said, so if I'm looking at those right now, and I think I'm on.
Yeah, we'll look at that. Hold on. So
Okay.
this is what I'm trying to say. This, like I said, I don't want to lose the what I'm trying to show you is your structure of your stop loss trade, not like getting into a trade. But What I'm saying is that by doing the stop loss trade, let's say that you're right and it goes down and it bounces, and this bounce right here creates the big short that happens here. And let's say we don't get in this trade, you go to bed, you wake up in the morning, and it never comes back. It never touches your entry point, right? For whatever reason. And you wake up in the next day, and the next day is because your entry would have been here. This would have been your entry point, right? Let's say you wake up in the morning, 6 o'clock or whatever, and you can see that at this point it would be in your consolidation area, which would be somewhere around here. And you realize that the short already happened, the bounce has already happened. This is the short that happened. This trade is over, right? So the different chart, the trade comes down here, trade is over, and it starts to build its way back up. You then cancel out your trade because that trade didn't work. Now, the purpose of having the stop loss trade is this. Very simple fact. Is that, let's say it happens this time, you're right. The next time you do it, right, and you can kind of measure out. So you do your stop loss entry, it goes up to here, right? And I measure that and I say, my entry missed by, here's the entry point that it went into. My entry was set up on my stop loss. I missed it by 0.2%, right? Let's say that happens again and the entry goes to here. Oh, I missed that entry by 0.4, right? If I keep missing the entries, what I do is when I make my decision to put my entry here on that stop loss, and I say, you know what? Normally I'm off by X amount. So what I'm going to do is I'm going to move my entry to the where I'm normally off, and I'm going to put it there. Because the data that I've seen is I've seen that I'm close to the entry, but it's always a little bit below what I do. So now I just simply move my entry down to there, and I play that distance between where I'm normally wrong. See what I'm saying?
Yeah.
It's not about getting in the trade. It's about not getting in the wrong trade. And that's how you start to build yourself where you inch towards the entry. And this will be a different video, but that's just an ideal of what we're trying to accomplish there. But what I want to do is go back here. So let's go back and do your stop loss entry.
That indicator you keep pulling up, where is that in trading view?
What, this?
Yeah.
That's the long position. It's just the short one. So go here. See how it says long position? When you're measuring your short, just pick the short position because all it does is reverse the red and the green. So
yeah, but what indicator? Like, where are you finding the indicator on?
So you go to your left. The top is the cross. You go down 1, 2, 3, 4. Do the drop down box. It's the top indicators. Forecasting. Right below patterns. Forecasting and measuring tools.
Yeah. Oh, yeah. Long and short position. I got you.
Okay. So what you're doing there is basically just measuring out, right? So, and what I want to get to is the basics. What I'm trying to say here is for you is when you move your entry to that position and say, okay, here's my $3,000 loss, right? What you have to do in your head is like, okay, I'm set at 3,000, but I know that on this 10,000 trade, I'm only allowed $1,000. The max I could do for is 1,000 for $100 for every 1,000. So my max is actually 1,500. So which means my stop loss would have to go here, right? So when you put that together, and that becomes your tool, right? Kind of like your that's your maximum. That's your $1,500. What the structure is doing for you, it puts the money and the percentages into a visual perspective where you're like, okay, all right, so that's 1,500 right there. That looks good. All right. And it allows you to be in a spot where you are happy. And then what I mean by that is, let's say that you're entering down here and your $1,500 stop loss would be here. and you looked at that and you said, you know what, that's not a lot of room. So then you move to there and say, okay, that's a little more room, right? It allows you to kind of use what you're, because it's not about getting in the trade and winning side. We already got that figured out. It's about where do I want to set my loss at? And then do I think that's enough cushion for me? And if it isn't, then you start moving up and going, I feel safer if it was here. And now
Right.
you've got a set thing. But the reality is this: you're only going to lose $1,500 max, right? And by having that max there, you then start to adjust your entry so that your loss has more possibility of surviving by not losing more by being greedy on your entry, right? It forces you to understand that this is your cushion. That's it. That's all you got. You got this section right here of red, right? And that's the end. So do I want my end to be here, or do I want my end to be here? Or do I want my end to be here? Right? That determines at the end of the day, if you're looking at all this, those are your 3 entry possibilities, right? So if you want your end, if you got into, let's say, down here, that means that that's your first entry there, right? This first blue. If you want your entry to be, your end to be here, here's your next entry. If that doesn't look good, you want your end to be a little bit higher, then you move to the next level and you say, oh, I'm going to have to enter here. If that doesn't look like enough cushion, then you go to here. You say, okay, that looks good, right? So here's 4 possible entries that you can have. But the bottom line is you're only allowed to lose the 1,500.
Right.
That will start to put you in a position where you start to see the trade, decide on the trade, and then with your structure, decide whether or not it makes sense if you made the trade where you were. So what would happen last night is you would have got in this position. You say, okay, my stop loss is here. That looks pretty good. If I scrolled over here and I extended my stop loss off, right? It looks like from that position, there's been resistance, 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 and down, right?
Yep.
So if you did this trade last night, you're probably going to measure out a $1,500 loss right here and say, that's right there. And maybe you say to yourself, you know what, I'm going to give myself a little bit of room here because, it's probably going to wick past that. So what I have to do is, let me get a line right there. I love when you draw the lines. There we go. And I decide that, okay, you know what? It's probably going to be, I'm going to give it a little bit of a wick, maybe a little bit of space here that it bounces. So what happens is when I go back to my trade and I realize that that's the resistance that it was hitting. You see when you go back, you see the resistance here, resistance, resistant, right? So that should have been the cue to you that this is the target. The price that where before it's going to reject is 7027. Right? Or if you went off of this one, you could have picked 7020. But either way, that's going to put you in a position where that's probably your entry, right? And then that also shows that it hit it right here again. You see 7020. So when you put your structure there and you say, you know what, I'm going to put my entry at 7020, that would have gave you a look at your stop loss, which would have been here at the $1,500. Now at that point, you can go back and look and say, that's pretty good. That's got a little bit of it's a pretty big gap between the average resistance and, the only thing that would concern me would be these last big wicks that hit over here, but I am above those, right? Now, sometimes you might say to yourself, you know what, I'm going to go slightly above it. I'm going to move my stop loss to here. I like to use these little boxes that are already on there. And a lot of times these little boxes, they put the lines in there. So I'll go to the next line. So what that means is now that I've made the decision to raise the stop loss slightly to avoid this big wick here for whatever reason, then when I go back here, I've already got my structure set up, right? So all I have to do is move my stop loss to that line. You see right there?
Yeah.
And now that makes my entry here. And that's the best you could have done at that time before you went to bed and say, okay, I'm going to put my limit stop loss at 7023. My stop
Mhm.
loss would have been here. Now, would you have woke up in the morning here and lost this trade? Yes. You would have woke up.
Mhm.
You would have saw that it had some type of big spike for some reason. It spiked you out and you were done. That was it.
Yeah.
But you would have walked away with a $1,500 loss. How much did you end up losing?
Yeah. Total, all total for today, 14,000.
Right. So 1,500 is better than 15,000.
Yep. Yeah, I think I lost like 9. I think I lost 9 on the first one, on the big one.
So what we'll do is we'll break down and kind of go over this. So we need a trade style because I was looking at you posted some stuff. Right. Let's see.
Yeah, those are the 3. There you go.
That's crazy. But see, this is
I
so.
know.
This is where the like your maximum, right, is the
Mhm.
most your stop loss, no matter what you do. Like we do ROI, it
Mhm.
needs to be 10%. It needs to be 15%. That's the max. Like you should be living on 10%. You know what I mean? Especially with that type of
Mhm.
like trade, right? Like, did
Right.
this have a stop loss?
Yeah, yeah.
Okay,
What
okay.
happened was
That's not
like
liquidation, right?
I went outside and I was like, let me just raise it up, and I looked where it had topped out and almost, I'm like my gut, because I'm big thing on 33, but wherever I put the loss at, I should have put it, I was going to put it at 7133. I think I put it at 7123, being cheap, and because I was like, this thing's got to turn around. I was like, it's not going to go past this. There's no way. But like I said, I've never traded this coin before, and these wicks are friggin' insane. XRP doesn't do this.
No.
And it's the first time trading this coin. So I don't know,
Yeah.
whatever.
No, but
I knew better.
Yeah, no. You always have to. So this is where. Okay, so this is why focusing on just the basic of the game that we're playing. The game that we're in, this is the entire trading is very simple. Anyone can win 5, 6, 7 in a row. The statistics show when you Google pros versus retail, pros win 40 to 50% of the time. Retail wins 50 to 55%. Retail investors with less than 1 year experience to 1 year have a higher win rate than professionals. Which, when you say make it make sense, it doesn't. A pro will win 4 to 5 trades every 10, where a retail guy will win 5 to 7. Makes no sense because at the end of it, professional traders, 90% of 70% of professionals are profitable, where 90% of retail investors are losers. And you say, well, how does that make sense when the pros only win 5 out of 10 and we're winning 7? The entire game is this: your loss. The losses is where you lose. It's a mathematical equation, right? It doesn't matter. You can't. It's mathematics. If you win, okay, it's very simple. If every time you win a trade, right, and every time this is skill level. That's why one trade doesn't fit all. So if your skill level is you can find a 1% move, a 2% move, or whatever it is, or you use 40x leverage and you get a 1% move, it's 40% gains. So the way it really works is based on your winning trades. So every time you win a trade, right? This is why I want you to post your history. We're gonna go through and we're gonna do a whole video a little bit later. Today's my anniversary, so I gotta like kind of get on that. But I want to set up a time tomorrow to go back and go make a video on this because it's important. This is the
Yeah.
fundamental of this game. Here's the game. When you look at your trades and you have a trade where you're making 40%, if you're doing $1,000 trade and every time you trade you make $400, I made a video on you, you've probably seen it on my TikTok, where you were averaging $450 to $700, right?
Mhm.
Now, what I did was say, okay, if this guy does his normal $450, he finds 10 trades a week. That's 4,500, 56 weeks a year. That's $250,000. If he does 5 trades a week, it's $125,000 a year. Now, that is the skill level in what your average is, right? Go through your pull up your position history and go through your position history, right? We had a 450, we had a 750, we had a 1300, right? So we have an average where you can do 400 up to $1,300, right? Sometimes
Yeah.
you even had a $2,300 win, right? But
Mhm.
we don't look at the big trades. We look at your consistency, which means is
Yeah.
if you did $1,000 or 10,000, whatever you're doing, you're consistently winning. That we have to need to go back and look at your percentages. What is your average win percent? Is it 10%, 7%, 15, or 20? Whatever it is,
Under 10.
yeah, it gives us our number, right? Which means that if we're going to average on a 7% move on a $10,000 trade, that's $700. If the trade goes wrong, we can probably walk away with 450. So what we're going to do is just say that our average win is $500. We're going to say that looking at the trade history, you can averagely win 50% of the time because that's the between the pros and the retail, that's the middle ground, which means every 5 trades you do or every 10 trades you do, you're going to win 5, which means you're good for $2,500 every 10 trades. Now, you divide that by 2 because you can only give back half of that to be a 2-to-1 ratio, meaning that you win twice as much as you lose. So that means you're only allowed to lose $1,250 for every 5 trades. So divide that by 5. That simply means here that you're allowed to lose $250 per trade. So when you set up a $10,000 trade and your goal is to, because what you're going for is that 10% win. So if you're doing a $10,000 trade, you're going for 10%. That's the $1,000, right? And that's your goal. So your average win is 1,000. We're going to cut that in half because we want to. What we want to do is increase the ability to fix your entries and move your skill level up, right? So we're going to cut the $1,000 win to 500. Do that 500 times 5, that gives us 2,500. Divide that by 2, that's 1,250. Divided by 5 losing trades, that's 250. We're going to anticipate that we're going to avoid 2 of those losing trades by not getting those entries, which means that our stop loss per trade, which is basically how you break it down, is $250 a trade on those 5 trades, right? So let me do it again. $500 a trade for winning. 5 winning trades is $2,500. Divide that in half, which means you have $1,250. Right? Divide that by the 5 losing trades you anticipate because you go 5 for 5 or 5 out of 10. That means that the 5 losing trades are only allowed to lose $250 per trade. You're going to avoid probably 2 of those losing trades, maybe even 3, by not getting into them because your entries are going to be greedy. Kind of like how I showed you how to move your stop loss, how we were there. So that means that you can take the 250 per trade and you can bump that up a little bit and say, okay, I'm going to be able to lose $300 per trade because I'm going to have, and at 2 of those trades I'm not going to get into. That gives me 500. Take the 500 divided by 3. At the end of the day, it's about 125. Right. So which means your average loss can only be $350. Okay. Now that we have that set up, when you go to make a trade, right? And this is why I was saying earlier, the maximum you can do is 10%, which means your 350 per loss could go to 700. You see what I'm saying? 700 in that
Yeah.
area. But that's giving you a
Mhm.
big leeway, right? So it kind of allows you to play that game to where you're like, all right, I'm allowed 350. I'm around that to 400. So now when you go to do your trade, no matter what you do, and you put your trade in, you know that you're only allowed to lose 400. So once you have your, which means if you did a $10,000 trade and if you did a 10x leverage, that means you get a 0.5%, which would be 500 bucks. So now you know every time you set a trade, if you're going to do a 0.5% pullback, that's giving you a $500 stop loss. So if we entered here, right, our stop loss would be here. If we entered here, Control Z. If I entered here, right, my stop loss would be here, right, the orange line. But that is a $500 stop loss. See what I'm saying? So it's kind of like, when you piece it out there, as long as it looks good, I would want it a little bit higher. So I'd want my stop loss, up on this area here, slightly above this, where these areas were. That means that my entry when I do it this way, my entry is going to be on this lower line right there. But that's because I know that if I go against my 500, that's just the way it is. So this, by having that set standard of maximum loss 500, target, you know what I mean? It's my 1,000. You see what I'm saying? You're still a 2-to-1.
Mhm.
You're winning 5 trades, but you're not losing 5, because by setting your entry correctly, you're going to avoid 2 of those losses. And the best part is that by doing that, your wins are going to go from your 1% win to, you're going to see, because like I said, we're cutting your wins in half, right? So the reality is your wins are going to be 1,000, 750, 1,000, 1,400. So out of those 5 wins, when you repeat that process, 4 or 5 times, you do those 5 wins, 3 losses, 5 wins, 3. Your wins are going to give you an extra 50 to, sometimes you're going to double, sometimes you're going to triple. But what we do is take the low end of it so that we have a very set scale. You're allowed to lose 500 bucks per trade. The target is 500 to 1,000, and that's just the way it is, right? And what that's going to do for you is it's going to avoid losing $15,000 in a fucking trade. It's going to then allow you to, when you do lose a trade, to go back and go, how did I lose that fucking trade? And then when we fix that skill level, and we'll go over this trade. I'm gonna, we'll set up a time tomorrow to go over this trade so you can see where you could have made this better. But then it's like you only paid 500 bucks to learn this lesson instead of 15,000.
Yeah.
Right. So the game, and what I really want to kind of go back to is that the game isn't about the winning trade. The game is about when you lose half of what you normally win. And if you lose half of what you normally win, then at the end of a 10 trade status, you will have won a 2-to-1 ratio. So you are a profitable trader. The only thing that our game in this entire thing here is to win more than we lose. And the easiest thing to do here is mathematically see what you averagely win, cut that in half, divide that up so that you know what you're allowed to lose. You're allowed to lose on a $10,000 trade. You're allowed to lose 500 bucks, period.
Right.
That's it. That's it. And your targets are 400 to 1,000. And that's just how you move. And if you're that boundary right there just guarantees you will always be a profitable trader.
Right.
Now, how do you make it more profitable? You get better entries, which allow you to get longer trades, which become 400 to 1,000 to 2,000. right? And then you say, oh, I got this shit down. Now instead of 10,000, I'm doing 15,000 bucks a trade. Now I've just
Right.
increased my trades, by 100%. But you're keeping your stop losses in the same zone. Because you've mastered the pullback. You understand your skill level allows you to have a 0.5% pullback, which is still $500 even on a $20,000 trade. But your wins have now tripled. That's the importance of just understanding that we're not in the game of winning trades or getting into big trades. We're simply this entire goal is to win twice as much as I lose, which should be easy
Right.
because statistically, pros win 4 out of 10, retail wins 6 out of 10. The average is 50-50. So anybody who ever tried this, on average, wins 5 out of 10 times. The only thing that separates the person who is profitable is the ability to win twice as much as you lose, because most retail traders lose twice as much as they win, because they stop loss at 40%, 50%, which means you have to win 40% trades 5 times. Right? Now let this sink in, because this is where the number is. If you have to win 40% trades 5 times and you're losing 40% trades, if you go 5 for 5, what have you done?
Even, right?
Exactly. That's not the game.
No.
The game is twice as much. So at the end of the day, you can only lose if you're winning 40% on your wins. The maximum you can lose is 20.
Right.
Like, that's how easy it is to say to yourself, I can only lose 20% on this fucking trade because my win is only 20. But that's where your risk is high, because you have to win 40 because you're losing 20. And you can play that game based on your skill level, right? Some people have a skill level that it's like it's okay to lose 20 or give yourself that extra cushion. But when I see that extra cushion, in my mind, this is exactly where I was 10 years ago, 15 years ago, when I was talking to professional traders, and I looked at how they trade and said, how can you help me? And I said, fuck, if I could get rid of 50% of your losses, would that help you? And they said, yeah. And all I did was, well, what do you make a year? I make $100,000. I know they do 2 to 1, which means their losses are 50,000. So I said, hey man, I tell you what, I'll get rid of half your losses for 20 grand. And they would pay me. And all I would do is this. I would look at how they traded, right?
Mm-hmm.
If they average 40%, the maximum is 20, period, right?
Mm-hmm.
If you wanted to improve that, right? I know that the easiest way to do that is to improve your entry. Because if you improved your entry and your skill level and found a better way to enter, you can take your losses down from 20 to 10. But here's the beauty of when you get a better entry, your gains go from 40 to 60.
Say it again?
So if you're so let's say you win a trade, right? So let's say this trade here.
Mm-hmm.
This is a perfect example. You get in this trade here. It goes down to here, and this would be considered a win, right? So you entered a trade here. You survived the stop loss. It doesn't hit. It comes back down, and it hits that target there, right? There's our win, right? When we looked at this was a successful trade. This was a 0.5% trade. If I was doing a 20x, I made 20%. I made half of that. I made 10%, right? Now, if I taught you how to get your entry better, and all I did was teach you a stop loss entry, and instead of this entry, you moved up to this entry, right? What happened is, instead of the 10% that you made, I now made 15% on the same trade.
Right.
because I slightly improved your
Squeezing a
entry.
balloon.
You see what I'm saying?
Yeah.
Now, as time went on, this was an easy way to. Two things happened here. One, by teaching you the stop loss entry and teaching guys their entry side, right? What I did was the stop losses that were tight over here, because a lot of times they would have hit stop losses here and lost this trade. I improved their stop loss by giving them that extra cushion, you see? Which means because they were professional traders have steps that they follow every time, so they're consistent with their data. So by doing this, what I did was I removed half of their losses because they no longer got stopped out, and I gave them that extra cushion, which allowed them to get into the trade that ended up, when it went up to here, it still went back down. You see? So I turned a loss into a win.
Yeah.
Right? So they went from winning 4 out of 10 to winning 6 out of 10. Now, as I went on with this, I realized, like, well, shit. If this gives, if their trade here is a 10% trade, and I fix their entry, and it's now a 15, to lower my risk, I can still go for 10. It's just easier to hit.
Mm-hmm.
So two things you do by fixing your entry. You lower your target risk because it becomes easier to get to, and you remove your losses because you no longer get stopped out.
Yeah.
See what I'm saying?
Yeah.
Mm-hmm.
And if I wanted to make more money, like I told them, I said, hey man, for 10 grand, I'll tell you how to double your profits. Instead of 200,000 a year, how would you like to make 300? They said, how do I do that? I go, how much do you trade? Well, I do 5,000 a trade. Okay, do 10.
Right.
And then instead of going for your 10% move, go for 7. So it lowered their risk and gave them their targets. Because the one thing I knew about professionals is they follow the same steps every time they enter. That's what they do. So I didn't
Right.
have to worry about teaching them all the fundamentals of the basics of that because they were always in on the retest, the pullback. I just had to tweak where they were. Once I knew, like if someone said, yeah, I'm winning 4 out of 10 trades, here's my stop loss, and I go look at their trades and I realize they're getting stopped out 6 times, but they're getting stopped out by a very small margin. And then I look at their entries and I realize that so that's why I used to ask people, write down when you enter a trade, how much it goes negative and then how much it goes positive, right? So if you enter a trade and you see that it goes 30% negative, right? We used to have stop losses at 40%. So your stop loss, you'd go negative 33% and then it'd go positive 30%. You go negative 27%, you go positive 27%. You go negative 15%, you go positive 40%, right? And what I would look at was your negative. So if you had a 32, a 40, a 38, a 29, a 33, a 34, right? All I would do, and this is so easy, I would say, listen, every time you go to enter, I want you to measure a 30% stop loss because that's normally what you hit. Your average pullback is 27 to 33%. So I want you to measure a 30% pullback. And they would. And I said, there's your entry. Does that make sense? If you are making an entry and it goes negative.
Yeah, no, I get it.
Yeah.
Yeah.
Right? So all I was doing was saying, okay, you get a 30% average. I put their entry at a 20% pullback. Right? So now I would ask them the next 10 trades, I go, what's your negative? They went from 27, 33, negative 22, 20. Now their negative is that now they're going negative because I pulled them back 20. Now they're going negative 7 and 12% because I've already factored in their 20% negative in the entry. So their 7 means that originally that would be 27 because I've got them to move their entry 20% back. So their entry would be, their pullback would be 7. And if you added their 20, it'd be 27. their pullback would be 12. You add your 20, be 32, right? So now they'd see their pullbacks go from the 30s and 27s to 7s and 12s, right? And now what that does is that created a 20% gain. Because instead of going backwards, now you're buying at a better price. Now you're going forward 20%. So then I could take their targets, because remember your original targets where you average 25 to 32% targets. Now you add 10% to that. Now you're doing 40 to 50%. So now I can easily know that you're going to hit 25% because I'm giving you 20% on your fucking entry. So I can target 30% with confidence. That's the original academy right there.
Yeah, but you gotta stick. You gotta stick to the numbers, like you said.
It's all mathematical.
The traders.
Yeah, it's all mathematical. It's all very simple. There's a million ways for me to fix people how they trade. This shit is not hard, right?
Right.
But what I've learned is all this time. That's why I went to Trading 102, is because the human component to this shit is the problem. It's when if I teach you how to do my trades, you then try to improve my trades, and then you change the numbers on your trades. If I show you how to make 80%, you want 150, right? If I show you how to do 50, you want 100. And then I say, well, do 10,000 and take 20. You'll do 10,000 and go for 40.
Right.
The human component is the problem. So what I have to do is Trading 102 is taking everyone can win 5 out of 10. It's systematically proven. It doesn't fucking matter. What you don't understand is taking profits and targets correctly so that you always, no matter what the fuck you do, is win twice as much as you lose. That's the only thing that matters. Nothing else matters. I don't give a shit what you do. Just make sure you win twice as much as you lose. And if you do that, you're profitable, bro.
Yeah.
The rest of it is just a journey where we figure out how your brain works, how you like to trade, how the risk, the feeling you want, or whatever it is, and then break it down to say, okay, do everything that you want to do except add this one thing to it, because you are only allowed to lose $500 a trade. It's all discipline. That's it.
All right.
That's all it is. And that's all. And if you do that, we can go back. Like I said, we'll go retrap this trade and we'll figure out why that trade jumped on you, right? Once we do all that shit, you can go, oh, that makes sense. Because you were right. There was a short coming. It just came later, right?
Yeah.
That's really what it comes down to. But at the end of the day, if you set your trade and you got a $500 loss, you wake up in the morning, you take a $500 loss. That's the way it works. Now, the beauty thing is that you just did 5 other trades that had you up $4,000. $5,000. So losing 500 isn't shit.
Right.
That's part of that's the way it is. Nobody wins every trade, and then what happens is, unfortunately, the crazy part is success is a downfall, right? Because it's like when we do these trades, our system, if you follow our system, if you do it, this is kind of where back in the day it used to get crazy, is you're supposed to win. If you suck, you win 7 out of 10. That's the downside of my original system, is you're too good. Because when you become too good, you start removing rules.
Yeah, agreed.
And all of a sudden, you're like, oh, okay, I'm looking for 400. I got 1,000. Oh, I won 15. I'm up 2,200. Holy shit. And you just keep rolling. And eventually, you stop following the steps of the entries and the steps of the confirmations. And you're just winging it. And then you see it push. You're like, oh, well, I can't go any higher. I'll just add. And I'll add. And I'll add. And you went from, adding to like all of a sudden, you're in a bind where you can't give up $1,000, so you risk 2,000, and you say, "Fuck that! I'm not losing 2,000." And you say, "I'm just gonna go to 4." Next thing you know, you're down 10. because you were
Yeah.
unwilling to lose 1,000.
Yeah. Had I been, well, yeah, like I said, had I been in front of the computer,
Yeah, it would
I
have been
still would have
different.
lost. But who's to say? I could say I'm not even going to go there and like butterfly effect it.
Yeah, but that's
Who knows?
where when you think about it, it's like if I was sitting there and watching it, I would have made this decision. But the reality is, if you have
Hindsight, you
your
could say that.
well, no, not even hindsight. If you have your structure right,
Mhm.
you would have mentally said to yourself, I am only allowed to lose 500. On 10,000, the max is 10%. I can only lose 1,000. So
Right.
at the end of the day, you would have capped yourself at 1,000 and said, fuck, why didn't I just take the
Yeah.
500? You see what I'm saying?
I would have had 13 more chances to get in and
Yeah.
make it work.
But it's the point
Yeah.
of like, your max is 5. Your ultimate max is 10. Like, because your average win is 40, right? Which means you can lose up to 20, but you want to cut that in half. Means the max you can do is 10. So when you did a 14,000, that means that the maximum you could lose is $1,500, $1,400, and that's your max. That's all you can do. And if it's going the wrong way at that point, you got to say fuck it. I made a mistake, because you know the next time you trade, you're going to get your $1,500 back. You're going to get your $3,000 win. You're going to do what you normally do, right? But you can't combine. You can't get a knife cut or a scratch and then dig it until it's a gouge. Like
Right.
like just put a band-aid on it, call it a fucking day. Like sometimes you're gonna get hit. But that's what happens is when you have to have a boundary, you gotta have a number so that you understand you cannot fucking break it. I've been there, bro. I'm not saying like I've been in where markets are unpredictable sometimes, bro. Everything can line up. I was in a trade one time where it was so exhausted, there was nothing fucking left. And I was in it, $15,000 trade. My maximum loss on that trade was $1,500. It got to $900 and it started to push. And I was like, where the fuck is this push coming from, right? So as it started to tweak 1,200, I moved my stop loss to 3,000. And there was no way it should have done what it did, but an exchange came in and bought. And it wicked up and cost me $5,000, and then it dumped like a fucking son of a bitch. And I was like, you motherfuckers. Right? But I knew that my max was 1,500, but because I was everything looked amazing. It was perfect. I went to $5,000 because it shouldn't have happened. Right?
Exactly.
And really what I did there is I created, my normal $1,000 loss. I just took 5 losses on one trade. Which means
you broke
now I broke my law of average. Now I got to turn around and I have to win my next 5 trades, my next $5,000 trades, because now I'm fucking down, right? So it's like and the moment it happened, I said never do that again. And now I've been in situations where I see it happening, and I go, and I actually lower my stop loss, and I say fuck 15. I'm only going to take 1,200 loss here. Fuck that. Like, and then all of a sudden there's this giant spike. I catch the spike and I short the spike, and boom, I hit it for $5,000. Like I learned my lesson to accept when it goes the other way. Like it's going to happen. There's going to be moments like that. But that's where when you have the number and you have the boundary, you just accept it. It is what it is. Like I'm only allowed to lose 500. I'm gonna push this and say 1,000. Fuck it, hit 1,000. Let me go back and just reset this. The next trade will be the right one, and you just accept it. You don't give back the money. You know what I mean?
Yeah.
Like that's the whole. You got to always put in your mind, I'm only here to win twice as I lose. And as your skill gets better, I'm here to win 3 times more than I lose. I'm here to win 4 times more than I lose, right? And you start to understand that the goal isn't being in trades. The goal is to lose 3 times less than you win. If every week I win $1,000, I can only lose 300 that week. And if you start playing the game that way, you start realizing your entries are like, I need a little more greed on that. Yeah, I need a little more. And then all of a sudden, you find yourself in better entries that create more profits. And you're like, oh, I was only expecting 400. I got 8. Right? But what happens is you remove your losses because you're being such a greedy fuck. But that's what happens. And then all of a sudden, you start getting the zone you were in. When you were chipping away 400, 700, 1300, 700, 400, 2200. And you're like, shit, I'm on a run. And that's where you fucked up. You're like,
yep.
I'm going to give back 7,000. 50% of the fucking trade would have been 7, you know what I'm saying? 5,000.
Yeah.
And you got to say to yourself, wow, why am I giving back 5,000 when I've been averagely winning 700? I can only give you 5 at the max. The most I can give you is 4. You're asking too much from me.
Yeah.
That's how you got to feel. Like, take a loss, but take the right loss. It's okay to lose.
Yeah.
Because you got to say, okay, this one loss, my next trade, I'll make this back. That's why I never worry. Because if I do take a loss, the next time I enter the trade, or if I'm tracking a trade, the next time I enter, I'm going to get that loss back, and I'm going to get double it up. So I don't worry about it because the loss was so low that I know my wins are twice as big. So when I do take a loss, I'm like, the next trade will win.
Yeah.
Yeah, that's just when you. That's why, like I said, I got to make the new videos where it's like day one is just get this one concept in your fucking head. Win twice as much as you lose. This entire game is very simple. Start off winning 2-1. You lose if you win $1,000 a trade, you can only lose 500 a trade because you're 50-50. And you should be greedy. You should be going, okay, I can only lose 500. I'm going to only give back 3. Right? Protect my money. And then when you get better at trading, instead of winning 1,000, you'll start winning 1,500 or 2,000. But your loss is still 300 to 5.
Yeah.
Because as you get better in trading, your entries get better, which means your stop losses are better. You won't be hitting stop losses because your entries are better. You never have to increase your give back money.
Right.
Because as your skill level gets better, your entries get better. So your stop losses, they don't even really hit because your entries are too good.
Yeah.
Now you're making more money on the front end. And now you go from a 2-1 to 3-1 to 4-1 ratio. And now if you want to make that money even bigger, you double your bags and then you lower your percent. If you're averaging 30%, now you go to 25%. But now your bag is doubled. So now you're making, an extra, you're almost making 70% more. So you go from 1,000 to 1,700. You go from 2,000 to 3,400. You see what I'm saying?
Yeah.
That's the process. So those are the videos I'm going to make this week because that is really the one thing you have to have in your fucking head. You cannot give back that profit. Never give it back. You're going to have a trade that does something that it's not supposed to do. It's always going to happen. You never know when, especially in longs, when you're shorting a long, like you'll never know when some motherfucker's sitting around going, give me 100,000 a Doge. Right? It's so cheap right now. Right? You never know when institutions or, exchanges are going to be like, let's replenish our Doge. Like, you're just never going to know. Like, that's kind of the way it is, right? Or you just never know when a group of people are sitting around going, all right, Doge has been at this level for the last week. Let's go ahead and buy. Like, you just don't know, right? That's the kind of fucked up thing about longs. The good thing about shorts is that when the money comes in, you can see that, okay, someone's got to take profits here somewhere. and then you got to break that down. So that's kind of like the moment of that. But I wanted you to kind of like get that in the zone in the head, like, okay,
Yeah.
I can only give back $500. You know, the maximum is 750 on every 10,000 trade. Where you should be starting at the 500, so that way it's like when you measure out your entry, you then give yourself a little more room.
Yeah, definitely.
Because you're always like getting greedy on that entry. And what you're doing there is you're finding your zone, your average, you know, percentages of negatives and positives, right? It's like once you find that little zone, you start creeping towards the entry. Ugh, it didn't pull all the way back to my entry. Ugh, it didn't get to my entry. I'm inching up. You know what I mean? Like I'm working my way towards that mug, right? You don't want to be where you're in an entry and you get stopped out. You re-enter, get stopped out, re-entered, and then it goes crazy. And you're like, all right, and you just end up breaking even. Like fuck.
Right.
You want to be in a position where you're playing the game correctly, so it doesn't matter. The game is the beautiful thing about this game. It's already laid out. Everyone, professional to retail, average 5 out of 10 trades. So if you're calculating your entire world based that you will win 4 out of 10, you're already in that position. You say, okay, my 4 trades that I'm going to win are giving me $500. That means I have $2,000. 1,000 of that is going to go, or my $2,000, right? Because you're winning 500, I'm winning 2,000. That means I can lose 1,000. If I'm going to lose 6 trades, that's $150 per trade. I'm going to avoid a couple of those, so I'm going to say that my maximum loss is $250, and that's it. Now you walk in, you're doing your $1,000 trades. Every 1,000, you're allowed $250 worth of loss on every 1,000. Right? That's why I do 100, because my entries are better. Right? But you could sit there and be like, oh, I can every 1,000, I can give up $200, because every 1,000 I'm expecting to make 400. And that's just how you live. As your entries get better, profits get bigger. But that's the basic game. Win more than I lose.
All right, I'm gonna. It's dinner time for me. You got an anniversary to go to.
Yeah. But that's why when I looked at the one thing, when I looked here, Wicked Out and Rex, when I look here, I'm just like, when I see a 59%, I'm just like, the maximum is 10.
Yep.
That's the only thing that goes through my fucking mind when I see this, right?
That's what gets me every time.
Yeah,
and I know that.
Yeah, it's like, dude, it's okay to take the loss. I mean, on here, take the 10%. I think the 10% would have been what, 1,400? Like take that loss. Something happened, something was wrong, and we can reevaluate it. You know what I'm saying? This one here, 5,000 or that's $5. That's that one bad. But like, here's 500, right? And it's like, it should only be 10.
Yeah, like all of, like you see, they all were like they all got liquidated at the same time.
Yeah, we'll go through this trade and break it down, but it's like it's just the max. Like losing is fine.
Like, that's
you
the
have to put
5911. That's when I originally got in, and then was the next buy-in, and the next buy-in just wrecked.
Yeah, you can. And that's the other thing is, like I was talking about, is kind of what the issue is, because you start. Here's the thing, right? So you start off with a $15,000 trade. You take a fucking massive lump, and you lose, say, fuck it, 30%. So this would have been $4,000. Now you're down to 9,000. Then you get back in a trade, and then on there you take another, lump again, and you lose another, 2,000. Now you're at 7, right? And then you get in again, and then at this point it goes for 50%, and you're like, oh, all right, fuck it. But the problem is you started with 15,000, you ended up with 7. You won 50% on the 7, which is only 3,500. So at the end, you did get the trade you wanted, but you're still, 35% short of where you started, right? That's why when you do your bags, if you do a bag, you have to have the same amount. So if you're doing a 10, okay, so think of it like this. If you're doing a $10,000 trade and you know that your maximum loss would be 1,000, that means that you have to have $5,000 on the side to pay for your 5 losses. Because every time you trade, it should be $10,000. See what I'm saying?
Right.
So that way it's like when you do hit, you get the profit that you were supposed to get, right? Because your estimate is that I trade 10,000, I take 10%, that's 1,000 in wins. Half of that is 500. I'm allowed to lose X amount of money off my 6 trades, right? So you have to win the amount that you're supposed to win when you win, right?
Yeah.
And
It's just to win and lose. I got you.
Yeah. So that kind of like puts that in. What I want to show you here real quick, and I'll make a full video on that, is just kind of like closing this trade now that I kind of have it there. So this is what I talk about closing, right? So when you close, do you just go here, hit 100 and hit close?
Nah, I'll be on I'll go to where it says positions or whatever, and then yours just looks different than mine. Yep, I just hit close.
Okay, yeah. So you just hit close here.
Yep.
Okay.
Close all or whatever.
Yeah. So what you want to do is you see how it has price. It says market.
Yeah.
You want to go to last price. See how it puts the number in there? That creates a limit. So you see how the last price when I clicked it was 7076 and now it's 7077, right?
Mm-hmm.
So if I put, now I can pick my quantity, 25, 50, or 100. So normally what I do is I'll pick my quantity so that I know what I'm selling. So if I'm selling 100%, then I go here and I wait for the price that I'm looking for, the movement, and then I click it and then I close. What this creates is a limit order. And I'll make a video just for this, but I just wanted to kind of get this before I leave you. What it creates is that it's going to close, but the price that I want is 007077, right?
Yeah.
When you hit market, right? What that means is this candle, right? So for instance, you see this red candle here? This red candle has a price at the top of 7078 and it has a low of 7075. What the computer will do is that there are orders, like in this order box over here. Notice how here there's 7066 all the way to 7085. So there's 7085 orders to here. And there's 70867 orders, right? Down to here. So when you hit close, you might be at this level up here, right? You might actually be sitting at this level. But what it does is it doesn't go in, like, it's not, eventually they'll fix it to where it gets smart. But right now what it does is it just starts to take the orders that are in the order box. So most of the time, the orders that are in the order box are lower than the current price. So what it does is it just starts to fill. So, and especially if you're doing $10,000, you got a lot of fucking orders. So what's going to happen is you're going to eat up a lot
I watched
of
the
these.
cascade that they took me out after the fact. I was like, what the fuck? That's not what I went out at.
Right. They're going, right. But it's just trying to fill. And so if you're selling, 10,000 shares, right? Doge is what, 7 cents. So at that point, you're selling like 700,000 shares, right? You're going to have something with 5,000 here, 3,000 here, 2,000 here. You know what I'm saying? 10,000 here, right? You're not always
So I saw it. I was like, what the hell?
So it's going to just fill, but it's going to fill in all these fucked up areas. But when you put like last price, then it tries to stay in this zone. So for instance, like my last price is 0078, right? So let's say I want to be specific and I wanted to, you can even do something like this. If you're expecting it to jump, you can turn around, go over here because it's a limit order. And let's say that I wanted to close at 708, right? And then I hit close. it puts a limit order at that price. You see?
Ah, gotcha.
So you see how it's falling here? If I go back and I
Mhm.
say last price now, it's 7.6, right? So if I go to close it, it's going to close in those areas that I'm looking for. That price is what I'm looking for, right? Now, what I have to do is I have to close this limit order because I had that set up. Now I have my quantities 100. I pick last price 7.6. I hit close. Now you can see that it doesn't automatically close out because it's a limit order of close. See what I'm saying?
Right.
So now
So
what it's
as
going
it
to do,
goes
it's going
up,
to, right. So now when I go to my position, right, 7076, and I look at my long position, you see how the close price is 7076?
yeah.
That was because that's the limit I had. Now, if you go over here, look to the right, see how it closed quantity? My max held was
Mhm.
5,809. It closed all 5,809 at that price.
Right.
So I got what I expected.
Yeah.
Now, the only problem with that is when you go to close there, it might close 10%, 20%, right? And then it'll start to, like, it might go down. It might only close a little
Mhm.
bit at that price to where you might have to, how we pull it down a little bit, you might have to drag it down a little bit to get to the price that it's, if it's falling faster than it should, you might have to drag it
Mhm.
down a little to get that price. But what it'll do is
Gotcha.
it'll limit order on that price. It won't be 7024, 7015. You know what I'm saying?
Yeah.
It won't
Yeah.
be the shittiest price out there. But I'll make a full video on that.
Exactly.
So let me get
Okay.
let me get to this, but I just wanted to kind of like, cover the basics of like how, when you have a set amount to lose, it's just the way it is, right? But the whole thing is
Yeah.
at the end of it's like explaining the multiple ways to uh, cost average, or not cost average, but what do they call risk management, right? There's 100 different ways to explain risk
Mhm.
management. The bottom line is this: the game that you're in is win twice as much as you lose. So it doesn't fucking matter how you risk manage. If your skill level is X amount of dollars per trade, right? So if you averagely win $300 on every 1,000, then you can only lose 150, half of what you averagely win. That's it.
Right.
That's the easiest way to do it. So I'll make a whole video on it, but that's the
Okay.
quickest way to decide. Like, well, I wonder what my stop loss should be. 150. That's who you are. Now, when your skill levels
Right.
get better, you like some guys. So if you like you do $1,000 trade, some guys might be able to do a trade that's only, some guys can do $1,000 trade and average like you 40, 50, 60% per trade, right? So we go back and look at your trade. That's why we got to pull up. I'm gonna have you screen share, and we're gonna go through your
Mhm.
trades, right? So when like here, so he's always doing 30%. So his whatever his $1,000 in, he's going to average $300. So his stop loss should always be 150, right? But that's because he targets 30%. You see what I'm saying? So that's kind of where
Yeah.
he's running his game. Over here, you got August here. This guy can do 70%, 150, 300%, but he needs to take his lowest percent and say, hey, my average on $1,000 trade is 60%, which means he's only allowed to lose $300 a trade, right? Just like, kind of like that's the average of how you do it, right? um she averages 40 to 50%. So everyone, like here, so here's Crave, right? Crave average here, you get 63%. So he's on his $1,200 trade, he's averaging 63%. He needs to cut that in half and say, I can do 63% trades, so I need to focus where I'm at 40%, which means I'm only allowed to lose 20%. So if his average is $500 a trade, he's only allowed to lose 250 a trade. And when he does trades like this, that's just extra. That's just building the bag. But
Right.
but you have to have consistency. That means if Crave
What's
trades
that?
like this and gets to a point where he says 10 trades and he's got, 5, 6, 7 wins like this or 5 wins like this, his 5 losses can only be 200.
Right.
Because that'll make him a profitable trader. But that's what you have to do, is you have to kind of go into your, based on your skill level. Now, as you start to learn your trade, learn how to become stronger at trades or move your averages, then you start to, you start to move in. You start to, you make more money and your entries get better. You don't have to worry about your loss, because it's like here, your average is 400, 200 trade. When you have bigger trades, that's just extra cash. But once you have that number, that's just your number. Now, as your skill level goes up, your numbers change slightly. You know what I mean? But averagely, when you look at everybody, averagely 30 to 60% is the average. So you can say that I'm going for 30. That means $300 every 1,000. That means I'm only allowed to lose 150 every 1,000.
Right.
There's your number. So if you're doing 5,000, right, that you're only allowed to lose 750. You kind of like, it's a set number. It's just it's just the way it is, right? So if you're kind of moving yourself up to a $5,000 trade and you're going for 10% at 500, your stop loss can only be 250, and that's where you start your day off, and that's just the way it is. Every $5,000, I'm risking 250 because I'm going for 500 in profit. It's okay if you make 1,000 or 2,000, but your goal is a 10% move, 250 loss. There I am. And that's it. There's nothing to think about. Everything else is you're figuring it all out. But if you stay in those zones right there, you're always going to be 2 to 1 on your money. The only reason you're trading here is to win more than you lose.
Yeah.
And once that's kind of like, that was kind of like watching all this stuff. Risk management, you could talk about it 18 different ways, right? There's all types of ways to break down your risk management. The very simple way to do it is this: whatever your skill level is today, whatever you earn on every $1,000, whether it's 10%, 15, or 30, whatever that brings in, half of that is your stop loss. That is it. 2 to 1 ratio. When you get better, your entries will become better, which means you will hit less losses and your gains will double. And your stop loss stays exactly the same as you move through the ranks. If you're giving up $250 or $300 a trade, that's where you stay.
Yeah.
And then once you get your profits from 200, 300, you're normally winning 5 or 6. You start winning 1,000, 12, or 1,500. You can move your stop loss to give you a little bit of cushion. You can move your stop loss from 250 to 350.
Yeah.
But as your entries get better, your stop losses should be in good positions because your entries are better, so you shouldn't be actually losing.
Yeah.
But that's how you break down risk management that easy. The game is to win twice as much as you lose, period. So see out of your 5 trades, what's your average wins on your 2 or 3 trades, and that's half of that is the maximum amount of loss. Once you have that figured out and you go to make an entry, put your loss in there. If that loss isn't below a support or an area that you think it's going to go or possibly touch, then lower your fucking entry.
Right.
Give yourself a chance. Especially right now when the market doesn't have a lot of volume, it's probably going to fucking pull back.
Yeah.
And now maybe not even that, the double support line.
Yep.
Right? But yeah.
Cool.
Just stay. You're doing great, bro. I mean, you got to stay away from the you got to stay in your zone. I know it's hard. It's hard when you start rolling out. You're like, all right, I'll do 5,000, 500, 7, and then all of a sudden you're like, man, I'm up 10 grand.
Yep.
And it's easy to get that shit back. But that's why it's like when you're just chucking away and you're just beating up the system, it's like 2 to 1, 2 to 1, 2 to 1, 2 to 1. right? You're supposed to win 7 out of 10. You're supposed to win 8 out of 10, right? That's just, you got to remember, like, oh, the normal is 4 out of 10. I'm winning 8. You're already up 2. You're already up 200%. You don't need to be greedy on anything else. Keep the losses down. Keep it simple. 10% gainers, 15% gainers. You're in a good little zone there. 10,000, go for 10%, 15%. You were taking in 700-800 a trade. I mean, all you had to do on that, like I said, is like piecing that together. 5 of those trades a week, which you were easily in, that's an extra $4,000 a week.
Yeah.
And you're just doing, you're doing your part time. It's $250,000 a year.
Yeah.
And you're just, and it's all fit into your, like everyone's life is different. Everyone's schedule is different. Everyone's ability to, get to a computer. Like most people have bosses. Some people are bosses. Some people have where they work outside and they can check their computer and their phone periodically. Some people can't go to a computer or check their trades, for X amount of time, right? So everyone's life is a little different. So once you find your schedule, you're all in the same boat. You're all looking for those 5 to 10 trades a week, setups that work, and you had your zone right there. You just got really convinced on this short here, which we'll go over tomorrow, and you just took if these losses would have been the simple $1,000 losses, right? You could have took 2 of those losses in a row and then caught this last pullback and made back $2,000 or $3,000.
Exactly.
Yeah. All right, brother.
All right, man.
We'll cover this and we'll go through this, but it is, it's kind of like it's like I said, it's the human factor.
Yeah, it is.
That's the hardest part of this game, is realizing like, hey, everyone, and that's what makes it so appealing. Like I said, man, it's so easy to do that you just become so confident, and then it's like when it goes the other direction, it's the only difference between a professional or I don't even like saying pro because everyone's in the same boat, but the only difference between a trader that is profitable versus a trader that is not is that the profitable trader never loses more than half of what he averagely wins. That's it. That's the one rule that makes you profitable. Never lose more than half of what you averagely win. That is it. That's the entire game. And if you want to be even better, if you want to become a better trader, you get that down to never lose more than 30% of what you averagely win. That's where you know your skill levels on a higher level.
Yeah.
That's the goal. That's what the focus should be. Not all that other shit. The other shit is just smoke and mirrors, and then you get caught up in the hype, and next thing you know, you're like, oh, it's gotta go. George Bush is coming back. Donald Trump's putting 10 billion in. Right. XRP 10,000 tomorrow. It's kind of like it's just human nature, it's just kind of like being human, but when you're trading systematically and you have boundaries and you have your fucking number, you just do the fucking number, right?
Yeah.
And that's it. And you get data every time you do the trade. If you're doing better than you thought, then you increase your little target. You know what I'm saying? But that allows you to have information to make decisions, not emotionally or based on your how you're feeling, but by raw data. It is what it is. You know what I'm saying?
Yeah, 100%.
We'll hop on tomorrow, man. When I get a chance tonight, let's do some. I'll probably do are you at the shop tomorrow?
No, I'm off tomorrow.
All right, perfect. All right, I was saying. So we'll probably get in what is tomorrow? What is the day? I don't even know what today is.
Monday the 3rd.
Okay, so yeah, Monday. So let's jump in.
Yes,
probably 3 p.m. Eastern again.
Okay, that works.
Let's go over this trade and then kind of like get the short set up on there and then go from there. All right, guys, I appreciate you jumping in, man.
Actually, you're saying 3 Eastern. Can we do 6? Something later? 3's like kind of jams up my day. It's like right in the
Oh
middle.
yeah. That's fine. We do 6. We do 6
Okay.
p.m.
Okay, cool. That
We'll
works.
do a 6 p.m. tomorrow, Eastern.
All right, cool. All right, thanks, brother.
Yeah, that's fine. I'll go swimming. Fuck it.
All right.
Because you're 3 hours up, so that kind of puts me in the. Normally, what I do is the reason why I do it at 3 because it's noon, and then I'm done by 3, and then I go swimming from 4 to like 7. So what I do tomorrow is I try to kind of close it out. But I think tomorrow what I'll do is I'll go. I'll probably just hit the gym early, and then I'll close out on there. Yeah, I've been.
If anything changes, I'll hit you up.
Last couple months, I've been doing Call of Duty, and then I maxed out my player last night, and I dropped like 20 kills in Search and Destroy game after game, and I was like, you guys are just not good enough. I'm shutting off my Xbox. That's what I told him. I was like, it's me against clans, and I'm like, I'm 5 against 1. I'm still planting and killing them all. I'm like, dude, y'all suck. If I had my clan, we would just like, dude. When I used to play, I had 280 game win streak in Search and Destroy. Literally like 5 months, never lost a game. And I quit playing because we never lost. So now I'm playing by myself, doing all these things, and I'm like, it's not even fun like talking shit anymore because it's like they're so terrible. It's like it's not even worth talking shit to them.
You're on SEAL Team 6 level.
Yeah, I'm like, you guys are so bad. I'm like, I'm 50 years old. I mean, if you knew, I'm a 50-year-old man whooping your ass. Like, when I was 25, like, I was like, dude, I'm untouchable. I'm old now. I'm like, I'm still whooping your ass. Like, you guys are terrible at this shit. So what I did is I started playing Dead by Daylight, where you go do generators, and now I'm creating classes where I mess with the killer. So it's like I spend my entire time fucking with the killer so he leaves while everyone else is trying to like survive. Like that's my fun. It's like it's like now I'm trying to do something that's like everyone complains about killers. I'm like, you know what? I'm gonna find a way to like beat all their little cheat codes. Like that's kind of my new thing. But I was playing so much Call of Duty. I'm like, man, I'm going back to the gym. I'm going back swimming. Like, you guys are terrible. It's not exciting anymore. Like there's no challenge to it. So I'm like shutting off my Call of Duty. I maxed out my player, and I was like, I'm done. So I'll be done with that for a couple years. But yeah, that's why I normally try to get on around noon, and then I go swimming. But yeah, we can do 6 p.m. Eastern tomorrow.
Yeah, that works out perfect.
And we'll cover this, man. But like I said, the one thing we gotta hone home is just when you start, it's lose less half of what you win, and the average, if you don't know what it is, that's why we have a 30% target on $1,000 is 300, which means you can lose $150 a trade, and that's just trickled down to whatever you're at, and that's how you start until you get data, and once you have data, you start adjusting the numbers according to your skill level, and that's pretty much it.
Cool.
All right, brother, have a good day.